Welcome, Bitcoin fam, to the #1 Bitcoin pod. In today's show, we'll discuss Chinese crypto whale predicts Bitcoin to hit 500,000 per coin this year. I'll be explaining why, as well as his precise timeline. Also, we have Vinci doubling down on his $500,000 Bitcoin price prediction. I'm also going to hit you with the latest from Lyn Alden, sharing tips of Bitcoin outperforming gold over the next 2 to 3 years, as well as National Bank of Kazakhstan planning up to $700 million for their national crypto reserve. That's right. Also, Trump's son echoes president's anti-bank message amid the stablecoin yield fight. Also, Jack Mallers' strike secures New York crypto and money licensing. We'll also be breaking down the latest of the ETF outflows, which is 228 million, and taking a look at the overall crypto market. All this plus so much more right here in today's show. I'm your host, JV, alongside the Fed Chair, Nippinator. Today is March 6, 2026. Bitcoin pulled back some. We're trading at 68,500 at the time of the live. Let's kick it off with our feature story of the day. Chinese crypto whale predicts Bitcoin to hit 500,000 per coin, 500,000. Send it. I'll be breaking down the timeline and why he believes this is likely to occur. That's right. Bitcoin, which has been struggling since really fourth quarter last year after we hit the 126 firmament, we've dropped all the way down to sub 60,000, but he cites multiple reasons why Bitcoin's going to hit 500,000 per coin this year. So let's break it down, shall we? According to Wei Zhao, many big tech companies are now building the AI systems that could use crypto. So instead of humans making most payments online, AI agents may soon send money to each other automatically. It's like an episode of The Twilight Zone in this bitch, right? Zhao said the AI agents cannot easily use traditional payment networks such as bank accounts or credit cards. Therefore, the crypto wallets could become the default payment method for the automated software. Makes sense, peer-to-peer. Following the advancement into AI, Zhao believes the crypto networks could become the main payment system for AI to AI transactions. And if billions of AI agents eventually require crypto wallets, demand for digital assets like Bitcoin and stablecoins would increase dramatically. Now, Coinbase and Circle are fueling the AI crypto trend. Crypto exchange Coinbase just launched wallets designed for these AI agents rather than human users. Talk about weird. Also, payment company Circle introduced extremely small transactions that allow machines to send micropayments, 0.000001 fraction of a penny. Now, why would they do that? Zhao says this type of tech could unlock billions of automated transactions between the machines. Even SpaceX reportedly holds hundreds of millions of dollars worth of the Bitcoin. So while XAI, an AI venture linked to Elon, has also been expanding rapidly and hiring blockchain specialists. But now let's get to the timeline for this 500,000 prediction from Zhao. According to his outlook, Bitcoin could first break 100 Gs again as infrastructure for the AI agents continue to grow. Later, if AI-driven activity expands quickly, institutional investors could start buying Bitcoin aggressively. And if that demand arrives, Zhao believes Bitcoin will reach 500,000 by the end of the year. All I got to say, send it. And looking at the long-term BIDI chart, as you see here, the price seems to be following a similar pattern seen in the last cycles right before the big rallies. Bitcoin moving inside the long upward channel, which has guided the growth for years. And in earlier cycles, similar patterns led to the massive price jumps. So while the 500,000 target is still uncertain, Wei Zhao says that the current setup looks similar to the past moments when Bitcoin rose far beyond expectations. So you let me know your thoughts on this 500,000 Bitcoin price prediction. And I got another one for you. Vinci is also doubling down on Bitcoin reaching 500 Gs. You may recognize this handsome face. He's the guy who told us back in the day, just buy $1 worth of Bitcoin just in case. These are his infamous tweets. This is the actual video from 2013. He's telling people to buy it. I'm sure you've seen it before. I'm not going to play it right now. It's easy to find if you want to watch it. But anyways, he wrote on March 4th more recently, everyone panicking about Bitcoin being down to 72 Gs. In 2013, I told you to buy just $1. In 2017, they said 5 Gs. That's just too high. In 2020, 10,000 is the top. 2024, 30,000. It's too risky. The people laughing today will be buying at 200 Gs. Facts. Because I've been saying, see ya at 500,000 per Bitcoin. Let me know if you agree or disagree with the Da Vinci. He also believes Bitcoin, one of the strongest financial instruments available. Well, that's just facts on facts on facts. According to him, traditional savings are gradually losing value due to the inflation. That's right, your purchasing value in dollars is mathematically guaranteed to continue to dwindle until it's worth nothing, as Bitcoin's purchasing power mathematically guaranteed to go crazy, as it has been since the inception of the Genesis block. And against this backdrop, Bitcoin has several reasons for the long-term growth. Da Vinci noted over the past decade, Bitcoin significantly outperformed traditional savings instruments in terms of returns, leading many investors to gradually view it as not a speculative asset, but as a store of value. And that's precisely what it is. It's God's money. It's perfect money, and it is the perfect store of value because there's a finite limited supply. He also said the key driver for the Bitcoin growth is the limited supply. In the coming years, almost the entire Bitcoin supply will be mined. Well, not till 2140. That's just what it is. But the block rewards do get chopped in half every 4 years. So yeah, about 20 million coins already in circulation. The last one will be minted in the year 2140. So we still got quite a ways to go. Da Vinci's early Bitcoin supporter. He's also known for promoting some shit coins over the years, so be careful. But nonetheless, he does get clout and credit back on 2013 when he made the video. He's like, just buy $1 just in case. And if you would have bought $1, you'd obviously be rich in today's day and age. It is what it is. But then again, maybe you can make a decent buy today, hodl for the next 10 years, and still be rich. Ultimately, what I'm trying to say, it's not too late. We're still early in this game. You know what I mean? The entire Bitcoin market cap right now is 1.4 trillion. The gold market cap's already eclipsed 40 trillion. So if we were to overtake gold as a store of value, being Bitcoin is superior in any measure or form you could, conduct, then bada boom, bada bing. You already know Bitcoin's potential, infinity and beyond. Just like the fiat money supply. They can just print forever. Only the difference is your purchasing power in Bitcoin is going up forever because the supply is limited with 21 million. And if you don't know now, you know. All right, fam, let's dive right into our next story of the day. Lyn Alden tips Bitcoin outperforming gold over the next 2 to 3 years. I'm going to make a bolder prediction. Bitcoin will outperform gold forever. Why? It's superior to gold forever. It's a superior store of value, finite limited supply, it's immutable, it's unconfiscatable, and I can go on and on. But this is about Lyn. So she says, if I had to bet Bitcoin versus gold over the next 2 to 3 years, I'd bet Bitcoin, she says, on the New Era Finance Pod on Wednesday. Gun to my head. If I had to say which one I think outperforms, I'll say the biddy. It usually a pendulum between the two. If gold has gone up as much as it did, the entire diminishing return story per cycle is going to be erased in the coming one too. Many crypto execs, including Coinbase CEO Armstrong, predicts Bitcoin reaching 1 million by 2030, top of the decade. Send it. With clear regulations taking shape of the U.S., which Armstrong called the bellwether for the rest of the G20. Bitcoin often compared to gold as a hedge against inflation and economic uncertainty, hence gold 2.0 or gold with wings. With many investors dubbing it digital gold. Alden says gold is seeing somewhat euphoric sentiment after reaching a new all-time high around 5,700. On January. I wouldn't say it's a bubble, but it is somewhat euphoric, she says. The JM Bullion Gold Fear and Greed Index, which tracks sentiment towards gold, posted a greed score, 72 out of 100 on Friday. Pretty much the polar opposite with the Bitcoin Greed and Fear Index is at, which is currently an 18 out of 100. Alden also said the sentiment towards Bitcoin is somewhat unfairly negative. Bitcoin trading at the time, 71 Gs. We did tap 73-ish just the other day before our most recent correction. And again, 126 is the current firmament, which is the top we hit back in October. She says, I try to be hesitant about reading into how absolute these things are. Gold and Bitcoin can go up together. They can go down together. The doing. And while the two assets are often grouped together as alternatives to fiat, the relationship isn't always consistent. Sometimes the prices move in tandem during periods of the macro uncertainty, and other times they do decouple. Gold is not a precious metal that's speculated on, according to Ray Dalio, adding that the most established money that is the second largest reserve asset held by central banks. Also, CryptoQuant CEO Qi said in October, the Bitcoin's correlation with gold is increasing as both assets strengthen their reputation as hedges against the macroeconomic uncertainty. But anyways, big news. Next story, National Bank of Kazakhstan plans up to $700 million for the National Crypto Reserve. And I caught some other headlines that say $350 million. So I don't know which one's more accurate, but we'll just go with the conservative today. $350 million crypto investment coming from Kazakhstan. Preparing a step deeper into the crypto world, the central bank plans to invest $350 million in crypto-related assets as part of the broader digital strategy. Governor Timur announced the plan, signaling the new direction for the country's financial system. Here's the post on X. The National Bank Kazakhstan creating the crypto portfolio to the tune of a whopping $350 million. The plan was announced by their governor Timur. Interestingly, the investments will not be limited to Bitcoin, and based on reports, it could include deployments at the crypto companies and potentially altcoins like Ether and others. Very fascinating. And this is coming from Reuters, so very credible sources that are reporting on this, just FYI. No, it's not just some bullshit. The funds will come from Kazakhstan's gold and foreign exchange reserves, officials say. The goal is simple. They want to diversify national assets. It explores new opportunities in digital finance. Kazakhstan's already known for the major crypto mining hub. This move shows the country now wants to make more active role in the digital asset economy. The National Bank of Kazakhstan, again, up to $350 million in their crypto portfolio. The central bank will then fund the investment using part of its existing reserve assets, such as gold. Officials say the money will not come from government budgets or taxpayer funds, instead coming directly from the country's reserve holdings. The portfolio will likely be managed through the National Investment Corp, which works closely with the central bank. This structure allows Kazakhstan to invest carefully while maintaining strong oversight. Currently, the $350 million allocation represents an initial step, and if the plan actually succeeds, the country could increase its crypto exposure. Obviously, that's how they get to the 700 or even a billion. Strategy focuses on indirect crypto investments. I guess Kazakhstan's strategy is not planned to buy large amounts of crypto right away, but the country plans to take a more cautious path. The central bank considering indirect investments tied to the crypto industry. Officials are also reviewing the investment funds and financial products linked to the digital assets. Kazakhstan overall right now strengthening its crypto position, has already played an important role for the crypto industry after China restricted the mining of Bitcoin in 2021. Miners then moved operations to Kazakhstan. As a result, the country quickly became one of the world's largest Bitcoin mining centers. At one point, they controlled 13% of the global Bitcoin hash rate. I also heard Iran controlled 5% before the recent attack. But it goes to show you there's a global hash war going on all around the world. And countries that don't start stacking the sats now could truly get left behind, which will lead us to our next story of the day. Trump's son, Eric Trump, echoes the president's anti-bank message amid stablecoin yield fight. And I'm sure you saw the long message from Trump. I'm talking senior POTUS, and then Eric Trump more recently wrote, let me make this very clear. The big banks, think the JP Morgan, the Bank of America, the Wells Fargo, etc., are lobbying overtime to block Americans from getting the higher yields on their savings while trying to block any rewards or perks from being given to customers. These banks and others pay rock bottom rates on standard savings, often 0.01%, even as the Fed pays them 4% or more. This massive spread fuels record profits with almost none pass back to the customers or everyday depositors. Today, the banks are desperately targeting crypto and stablecoins, where platforms plan to offer 4 to 5% plus yields or rewards. The ABA and other lobbyists are spending millions trying to ban or restrict those yields via bills like the Clarity Act, crying fairness and using words like stability when it's really about protecting their low-rate monopoly and preventing deposit flight. This is anti-retail, anti-consumer, and straight up anti-American. Next time you see a big bank dropping billions on a shiny new Midtown Manhattan HQ, you know exactly where that money comes from, the non-existent interest rate they pay you. Precisely. It's all an illusion. Fortunately, the big banks are losing this fight and customers are waking up to the games. So yeah, this was a recent post he shared 2 days ago on Wednesday in response to his father basically calling out the banks as well. The issue of the stablecoin yield has been dividing many U.S. lawmakers, banking industry reps at crypto companies, stymieing the market-structured legislation. Eric Trump and many in the crypto industry oppose a ban on stablecoin yield, arguing it would block any rewards or perks from being given to the customers, obviously. A company representative, in response to the question about Trump's post, said the company was not apolitical organization, and he has been clear about why he helped create World Liberty Financial, WLFI, their DeFi platform. Also, Eric Trump's message was one of the latest public statements from a leading industry figure after 3 meetings between the White House officials and banking and crypto reps on how to address stablecoin yield in the market structure bill. The legislation, called the Clarity Act, when it's passed, has been delayed already. 43-day government shutdown did not help, and debates amongst lawmakers on ethics. It's funny, they're lecturing us on ethics. Tokenized equities and shareholders, and although the Senate Agriculture Committee advanced its version of the bill back in January, the banking panel postponed the markup and had yet to reschedule it as of Thursday. Both versions will likely need to pass the 2 committees and be consolidated before the full Senate can potentially vote on the bill. How do you think it all play out? Holla at your boy. I'll read the comments next up. Jack Mallers' strike secures New York crypto and money licenses. Payment company Strike received the virtual currency license and money transmitter license from the New York State Department, allowing the company to offer Bitcoin services to residents and businesses in New York. This is a big deal because it's difficult to offer financial things in New York due to their strict laws. But granted, in February, the approvals authorized Zap Solutions, which does business as Strike, to operate under the New York Digital Asset Regulatory Framework. According to the company announcement, New York residents can now use Strike to buy and sell Bitcoin. About time. Set reoccurring or price-targeted purchases and convert direct deposited paychecks into Bitcoin. The platform also allows users to pay bills from Bitcoin balances and withdraw funds to self-custody wallets. Receiving our Bit license is a defining milestone for Strike, according to Jack Mallers in a statement, adding the approval allows the company to expand its Bitcoin-based financial services in a major financial market. Well, he must thank Howard Lutnick for that. You know, he's the secretary working alongside financial secretary of the House, working with Trump, you know, and he's a partner, obviously, with Jack Mallers in 21, so I would assume he has all these connections to get shit done now. New York approvals remain a key step for the U.S. crypto companies. The approvals are another step in Strike's U.S. expansion. New York's stringent licensing framework, often serving as a benchmark for crypto companies seeking regulated market access. Other holders of the Bit license include MoonPay, Coinbase, eToro, Robinhood, and Circle. New York regulators have also taken enforcement action against license holders. For example, in 2024, Genesis Global Trading agreed to surrender its Bit license and pay an $8 million penalty to the regulator after investigators found failures in its AML and cybersecurity programs. Also in 2025, Adrian Harris, a former superintendent at the New York State Department of Financial Services, said the state had an outsized role to play in the crypto ecosystem and that the lawmakers frequently consult the regulator when drafting the digital asset legislation. And if you don't know, now you know. Jack Mallers doing big things clearly here with Strike and 21, which is now, I think it's still the 3rd largest corporate Bitcoin holder. And Mara, who's the 2nd largest, more recently announced they're going to be offloading all of their Bitcoin reserves, which will then make 21 Jack Mallers the 2nd largest holder. Also, they've been hinting of massive purchases to come. And when you have the backing of Tether, and Howard Lutnick, I mean, we're talking billions upon billions of dollars can flow into Jack Mallers' company, through these, outlets. So keep that in mind as well. All right, fam. Now for our final story of the day. Bitcoin relief rally hits wall as spot ETFs log 228 million of outflows. We did have finally positive inflows, which did climb the price to 73,000. And then we finally had some outflows once again, 228 million on Thursday. And that's why we have a correction here today, So while the weekly inflows still held at 917 million headed into the Friday session, year-to-date net outflows rose to 900 million. Cumulative inflows in 2026, so far 3.5 billion, while the outflows are 4.5 billion. So that's an extra billion in outflows over inflows. Total assets under management remain above 90 billion after reclaiming the threshold earlier in the week. And according to Farside, iBit, which is BlackRock's ETF, led the outflows with 89 million, followed by Fidelity with 48 million and Bitwise with 46 million. The slip in spot Bitcoin ETFs came as analysts pointed to the Bitcoin relief rally facing the headwinds amid the persistent bear market. Crypto Quant showed us that the Bitcoin rally recent to 73 was likely a relief rally rather than the start of a new bull phase. The observation aligns with the analyst's previous forecast that Bitcoin would fall below 60 amid the ongoing crypto winter. The current low for the cycle was roughly 2 weeks ago. It was like 59.9. So if we round up, we could say it was 60 G's. Do you guys think the bottom is in, or do you think we'll hit a lower low? Holler. Also, Solana ETF holds strong despite a 57% price drop since launch. And what else we have here? Quoting the asset manager here, he says they managed to not only accumulate $1.5 billion of inflows, but not really give any of it up, according to Eric Balchunas, adding many institutions increasing exposure to Solana in the fourth quarter of 2025. He says both are really good signs for the future. I mean, it is what it is. But anyways, was 74 a bull trap? What are your thoughts on that? Let's see if we got any specific analysis here. According to the Bitcoin Hyper post, they wrote Bitcoin made a local high of around 150 days after the time of the all-time high in the previous two cycles before pushing lower. So echoing in this view, they're saying if we were to crash like we did in 2022, from 48 to 15, then that can drop us to revisit the sub $60,000 levels. Let me know your thoughts on that. Mr. Crypto wrote Bitcoin retesting the ascending triangle. If it holds, I expect a strong move to the upside. And checking out coinmarketcap.com, the total crypto market cap today is down 3%. It's only 2.33 trillion. Bitcoin market cap 1.357 trillion. Crypto greed and fear index 18. Extreme fear yesterday 22. Last week 13. Last month 14. And checking out the time chain calendar, we're currently on block height 939,611, and you could exchange one fiat monopoly dollar for 1,475 sats, so you know precisely what to do. You pick up the sats, pick up a couple of gats, and pick up a couple of Bitcoin caps from my man Sergio over at bitcoincaps.net.